SP 500. This coronavirus bottom has something special which will change financial market for next 2 decades, and that current price Friday closing, you can see this is all-time high closing. So this yellow trend line is big dynamic support level. Big banks with their leverage buying entry, they are hidden below this trend line, and this is your major support level if SP 500 comes down, and static support 4600. So if NFP number come weak, very weak, let's say it show 4% unemployment rate this week, then this will trigger recession rule, and recession we all know wait for stock market. You can expect it going down. Or if NFP come super strong, that means unemployment rate again stay below 4%, because I think Biden can do anything, then that will trigger higher for longer. Right now there is only one bank who is saying higher for longer is back. He is not expecting rate cut, instead he is saying rate hike. Only one bank. So in both case NFP come weak or strong, this is bad for SP 500 this week. So if we ignore that only bank who is saying higher for longer, no rate cut, but right now market is expecting 7 rate cuts, some in 2024, remaining in 2025, ignoring what will happen on election month, and one next week. Expecting rate cut next week is not a new thing. It has been 1 year since March 2023. You have seen in each FOMC meeting they expect rate cut, but after 1 year nothing happened. So this is not new. New is they are expecting QE this month. They are expecting immediate shift from QT to QE, especially this week. So this was your March 2020. This was your March 2023. Now market is addicted to their Fed put. Begin in 1987. This screenshot, just tell me name of this book, because writer belong to one of the best university in this world. Special thing, soon before next FOMC speech, last year QE will end. 2023 QE and 2020 QE has different. They change some rules. So when that last year QE end, there will be less money in system. So you can expect same like 1987. There can be market correction. Everyone is waiting market correction. Nothing new. And that can be triggered by low liquidity in system because of QE ending. But problem is, after so many Fed put begin in 1987, investor does not fear buying at all-time high. If it crash 23% in one day like history, then they do not fear, because they have believed 2020 and 23 Fed is there, he will print money. Either Fed permanently kill Fed put. That's why after Silicon Valley bank run, he give a signal why rate hike. So if this week, because of strong NFP, or maybe Fed give direct signal about killing Fed put, then this thing can come down. Or if they continue Fed put doing QE on each market collapse, then this thing will never end. One day you can expect repeat of 1929. So SP 500 flying can be soft landing. Bitcoin flying means they are front running their Fed put monetary policy. And gold flying means recession is already priced in. Fed put is also important. We all know dollar collapsing, BRICS propaganda. If Fed kill Fed put, dollar will be reserve currency without using war machine. Gold, Bitcoin and that new reserve currency by BRICS, they cannot win against dollar if they successfully kill Fed put. If you see dollar index from 2009 crisis, when they first printed money on the name of QE, when interest rate made bottom at 0%, they are printing, but you can see dollar is up because Dixie, in simple term, dollar based on JPY and euro. It is a race, everyone is printing, but in the end, Fed print less money compared to everyone. In end, Dixie stays strong. And for more detail, if you see USD JPY weekly chart, you saw during that rate hike drama, when everything was collapsing, USD JPY was going up because Fed was doing rate hike, they were doing opposite of money printing, which we call QT, while JPY, BOJ, they were printing money. Now imagine this way, SP 500 goes down and Fed put return again. They do QE, but BOJ, they are talking about rate hike. They will not do only rate hike, they will also stop their money printing policy. In that condition, dollar will become very weak against JPY. If Fed print dollar to save dollar as a reserve currency, they will have to print JPY and euro more than dollar. If you see USD JPY daily chart, 151 is still big static horizontal resistance level. If market does not get what he want this week, the Fed put, then dollar will become strong and it can fly above 151. But again, each time USD JPY goes above 151, they do some magical thing, then it goes down. But this week is all about Fed put. Fed gives signal in favor of Fed put or against that monetary policy. If you see euro dollar daily chart, then after making 61% retracement, it went up. You saw instant rejection on daily chart from nearest resistance, but still it is sideways. Because we do not have crystal clear answer on first rate cut timing. And their QT monetary policy is more important than their rate cut. So next direction of dollar is completely depend what will happen after end of QT. Till then dollar, that's mean euro dollar, will stay sideways. And you have ECB monetary policy, so you can expect big action this week. Then after that, because of Fed, again big action. But be careful, this is big resistance zone and this is just technical support and nothing. GBPUSD daily chart, it is sideways. You have downtrend on H4 chart. It is making lower low with lower high. You have a parallel channel. So this upper trend line is a big dynamic resistance level. For support, you have clear static support 125 and lower trend line of this channel. If you see Bitcoin weekly chart, then this is your big size horizontal resistance level. You can call it triple top, same like gold, which people were saying last year 2023. But this price near 43k ETF opening price, they have leverage position in Bitcoin and these are big players. With help of ETF, they can track volume of Bitcoin. If NFP does not show 4% rate, then recession trade will priced out. If so 4% maybe near, then more recession trade will come. This is first recession. Crowd is not buying, they missed entire rally. Wall Street crowd, they are not even begin. Chance it can break out this triple top. But after that vertical jump last week, full detail video already. It is the question, when next QE fix, dollar printing press money, unlimited supply. Question is how you will hedge against unlimited supply. Big insult of silver, big support 22.24. If gold collapse from 2088, Bitcoin fly more, it can easily break out below this support level. So nobody buying silver, neither Wall Street, not BRICS. GLD daily chart, just copy paste of spot gold. If you see bullion and if you believe in bullion, since this price that is going down. Last week COT gold position, they were also flat, first down then flat. And since because of ETF, that was ultimate goal, centralization of cryptocurrency, they have volume of Bitcoin buying. And 2023 just speculation, 2024 now confirmed. They have made cartoon of Bitcoin. It is trading against dollar, it is trading against gold. And from last year 2023, somewhere here you can see that chart is like this. So they are dumping gold and buying ETF. So since 2020 GLD is not getting demand. And one more thing which was confusing everyone, big mining share Newmont, last week their CEO was saying this is generation buying opportunity. This is not new thing, this apply on every CEO. If their stock goes 1 cent, they will say buy stock. You have seen in 2008 crisis, they say buy stock today, declare bankruptcy next day. And people who are saying why Bitcoin has value, why it is flying, and why mining stock are collapsing, why it does not make sense. First of all, have blind faith in Ludwig von Mises. Then they print dollar. That's mean unlimited supply. In the end, your goal is to hedge against unlimited supply. First option was gold. Now you have BTC. Their number one choice always GLD. And there is no volume there. First time they have new choice BTC. When your ultimate goal is to hedge against unlimited supply, and when you are getting something with a limited supply, then why you will invest in mining stock? Go back to basic. You are buying gold or you are buying limited supply. Because this is last level $30. If that breakout, next one 15, and it will create more confusion for mining investor. And if I had to hedge against unlimited supply of dollar, then my first choice will be limited supply, which can be anything, not just Bitcoin. Why I will buy anything which have feature of increasing supply. In race of reserve currency, everyone forget oil. We have World War II just because of oil, but still it is used as a currency. We have this downtrend channel. Last wave 50% correction done. 81 to 82 big resistance zone. Intraday you can try selling, because if this is head and shoulder chart pattern, then this can be your right shoulder. On hard landing, price can collapse below 64, because more it stay up, more it will create problem for CPI. So you have clear static resistance zone 81 to 82. For retracement, big horizontal resistance zone. If you see Fed interest rate chart, people say Paul Volcker was greatest central bank of all time. He was the first person to prove after gold standard, printing press money can be reserve currency. And you can see interest rate during his time. If he had failed, dollar could have collapsed 40 years ago, but he saved dollar. That's why again killing fat put is most important for dollar as a reserve currency. And right now FOMC member are giving signal for rate cut path like this. Watch carefully, cut, pause, then hike, pause, then cut, and then hike again. This will explode stock market. So soft landing either turn into recession or economic boom. Both things are bad for stocks. And this week Fed speech, be careful if he give any sign about this type of rate cut path. Because market now expecting rate cut path like this. And you have 3 cycle. Once cut start, a small pause in the middle, then interest rate bottom.